There are a ton of buzzwords being thrown around right now within our real estate market. Low inventory, seller's market, hot market, bubble, crash. Is our real estate market just all hype, or is there really some truth to this? In an effort to cut through all the hype and all the armchair experts out there, let's take a look at some hard numbers and then try to draw our conclusions from there. So, is there really a housing shortage here in Phoenix? Well, the easy answer is yes. If you look at year-over-year numbers, there's about a 50% reduction in overall standing inventory. Basically, at any given moment right now in the Phoenix market, there's about half as many homes for sale compared to the same time last year. So are home prices really that much higher compared to the last few years? Absolutely. If you look at year-over-year numbers, there's been an average of a 25% increase in home prices just over the last year. Compare that to a more typical equity climb of anywhere from 5 to 10% a year, and you have a very significant increase in how fast home prices are rising and the levels they've now attained. So the hard numbers truly do show a low inventory market favoring sellers with historically high prices for the Phoenix area. So now we have to ask, what are some of the factors that is causing this market trend here? Well, I see three potential factors: rates, relocation, and rents. I even made them 3 R's for you. So obviously the biggest catalyst for all three of these factors was the COVID-19 pandemic. In March of 2020, in response to the effect the pandemic was having on our economy, the Fed reduced the base rate from about 2% to 0%. This was a historic move that also immediately lowered mortgage interest rates, which lowered monthly payments and dramatically increased the buying power of every single person looking to purchase a home anywhere in the US. In addition, towards the end of 2020, we saw a lot of corporations grant a big portion of their workforce permanent work from home status. That prompted a lot of them to look at moving to a more affordable but still desirable city such as Phoenix. Also in 2020, the city of Phoenix saw the highest average rental rate increase across the United States, with rents now hovering at about $1,700 per month. This prompted, along with the lower interest rates, a lot of renters to look at moving into home ownership. For $1,700 a month, you could buy a $325,000 home with not much of a down payment. So combine all three of these factors: relocation from neighboring states such as California and Colorado, the highest average rent increase across the US, and historically low interest rates making homeownership even more approachable, especially compared to the higher rent costs, and you get the Phoenix housing market. So is the real estate market all hype with a huge bubble that's about to burst? Are prices going to just keep rising forever and ever? Or are things going to start stabilizing? Well, I think we're actually starting to see a trend slowly towards our market stabilizing. Demand is finally starting to wane as prices have continued to rise, which is pricing more and more buyers out of the market. Additionally, inventory will start to increase as more and more sellers see those higher prices and want to offload at the peak of the market. And builder inventory will be able to start to catch up as they have such a huge backlog of homes to build. Lumber prices and workforce prices will hopefully start to come down so they can catch up to those numbers as well. So what does this mean to you? Should you hold off on buying a home for a while? Should you sell your home tomorrow and rent for 5 years? Well, as with all things in real estate, it's never going to be that black and white, and it's going to depend on your unique and specific situation. I'd love to talk through that with you, but in the meantime, here are a couple things to consider. So if you're thinking that you might wait to buy a home for 1, maybe 2 years in the hopes that prices will be lower, I think you might be disappointed. Although we are seeing the market start to trend downwards, that just means that prices are going to continue to rise at a slower pace. 25% equity a year is pretty insane and obviously unsustainable. So we're going to start moving back down towards that 6 to 10% a year number on average. But if you're hoping to wait and snag a deal in the next couple years, overall that's probably not realistic. And before you write off selling your home or maybe a rental property because you wouldn't have to worry about buying something else, consider maybe what you could do with your equity other than investing that in another property. Think about things like debt payoff, like college funds, or even unique investment opportunities. Those all become a lot more of a reality when you could maybe sell a property and make $80,000 to $120,000. And remember that even though prices have gone up pretty significantly, interest rates are historically still pretty unbeatable in the low 3%, and you'll likely not see that again for a while. So even though you might be able to wait 3 to 5 years and spend $30,000 or $50,000 less to buy a home, if your interest rate is even 2% higher than what it would be today, your mortgage payment will be $200, $300, $400 more per month, and you still have to rent for the next 3 to 5 years at Phoenix's increased rent prices. So I like to say there's no real right or wrong answers here, there's just trade-offs. You'll need to weigh those based on your own specific situation and your priorities. But I'm here to ask good questions, and when you're ready, craft a unique, one-of-a-kind real estate experience for you. Thanks so much for watching. Are you using battery faster than you're charging? What? So, I forgot the line.